Good morning, everyone. Welcome to our Thursday morning trading session. Hold on one second here. I'll get you my monitor. All right, so we just had the market open, and it looks like it's still a little bit of a mess from yesterday. Hold on one second here. Okay, if we take a look at the overnight here on the Eagle, you can see not a whole lot out of the London Open. There was a little bit of a rally here, a little bit of a retracement, so they're pretty much taking over from where they left off. Yesterday's session, another one of these very sideways, very choppy type trading days. And you can see Trade Forecaster here telling us that we are still in scalp mode. So I think we're going to be on hold for a little bit until we see what's going on. Oh, fantastic. Marlene says she's had a lot of success using Mike Filigera's ATR method here, waiting for the ATR to come into sync, taking the signal. Yeah, that's the reason I've left the ATR on here, because it works, it helps. Jim's asking me a question here. Good morning, Eric. Off topic, he says, do you know anything about creating income from stock using option strategies? I've got a whole bunch of shares of tea and want to protect it and make income off of it. Any suggestions? I'm not a stock guy. My stock strategies go like to the iron butterfly category, which is more of a short-term selling and buying thing. The fellow you want to talk to actually is Mike Filigera. And if you don't have Michael's email address, you can either shoot me an email and I'll forward it on to you, or you can just do a search, a Google search, Mike Filigera. Here, I'll put it in. Oh yeah, just shoot me an email. It's easier. Mike's a pretty heads-up fellow. He's been trading stocks for a long time, and he's very good at it. All right, so we're just going to wait these guys out for a little bit. I haven't checked. Let me check the news reports. Don't fall out of your chair. Yes, Eric is checking a news report. I'm just wondering why the market is so quiet today. Well, I don't see anything really significant there. All right. As I posted in my update yesterday, if I figured if the NQ was going to take out the yesterday's low, it would be very much a bearish day. And we'll see whether that holds for today. In fact, what I'll do is I will highlight yesterday's low. Here we'll do it on the Eagle. Oops, it was actually down here. Yep, that's the one. So 45.44 is the number we're looking at. What time is it? Well, it's still early. We're actually generating a green bar sell. Ooh, it's going to run away on me. I was going to show you this green bar sell right here. Speaking of ATR lines and flipping over and whatnot. So our green bar sell actually printed right here, but you can see it was against the ATR line. So what I've been letting it do is actually turn over and using the next bar as my signal line. So here the ATR line turned over. Going to use this bar now as my signal line or my signal bar. That was an attractive looking trade. And you can see that we're making some progress there. I'm always curious if I had taken it on the hash mark. See, there's the trade-off too. By postponing your entry, you're making it work that much harder. So right now we're just hovering above our profit objective. And now we would have hit our profit objective. So that's too bad. That was really a good looking trade. The Raptor had a nice signal as well. So we traded through the band, produced a buy signal, and then came back with our little test of the extreme and a failure, and came back with our with trend signal. So nice follow through on that one also. Also a strong signal. Oh, what happened to my stop strategies? Hello, where are you? Let's reload this. There you are. All right, we're just waiting here. I'm snooping around a few other markets. Crude oil a little bit on the quiet side. Okay, so we're getting a little bit, notice how we're getting the market reacting. Here's that low from yesterday. See how it's flinching? So that's what made this so attractive as well, is we had a pretty good idea where the market was going to be going. Trying to reach yesterday's low. Well, they're just kind of floundering there a little bit. Oh, fantastic. fantastic, Marlene. Marlene just grabbed a move on soybeans using a 6-tick eagle. Now my eagle is still set at 12 ticks, so it's going to be a lot faster, but I'm imagining this was the move here that she took advantage of. Well done. Soybeans, let's see, is there enough here that we can shoot a trend line? Well, we've got a couple of humps there that we can shoot a trend line off of. So there looks like soybeans also a little bit in wandering mode. That's very unlike beans. I was taking a look here at soybeans on the Hawk, thinking we might get something. This first micro-macro cross building, but nothing out of them yet. It's not a first micro-macro cross yet. We don't have that macro line in sync. Crude oil going very sideways. Well, sort of sideways. But still very choppy. Yesterday's inventory report came out and they made a rather large run up, and then by the end of the session they started declining. Well, I guess they didn't give up too much, although we are more or less back in that same neighborhood of where they began. Oh, fantastic. Mark nailed that green bar sell. Good job. Gone in with 2 contracts, he said, and managed to hit his profit target. Fantastic. He says, 1 more and I'm done. The breakout here would have been a good try, a good one to try, and I should have been paying closer attention. I apologize. What you could try to do, and maybe the eagle or maybe the eagle might try to reach too far, or you could use a tighter profit target. But we're going to expect this breakout and retest, right? That's what we're looking for here. However, we don't really know how far this move can go. I suspect that it will move far enough that you could realize a reasonable profit target on it. The NQ definitely looking bearish today. Oh, and I see we also had a couple of good signals here, both on the Falcon and the Hawk. Here on the Falcon, we had a late filter entry signal. See, so the trend line does not change color. The filter goes out of sync and comes back into sync. So the filter is late coming back into sync, and when it does, that gives us a pretty high probability signal. Here was another one back here. Market floundered a little bit. Normally we get a little more follow through on those late filter entries. And here on the Hawk, very good follow through both here on the first micro macro cross, our 4 arrow consolidation, our macro pullback. They're all kind of smushed here into one area, and then the market fell off. Jim's shooting me the advanced decline numbers, and we're definitely bearish about a negative 1100. So we just got to pick our moment. I think everybody is looking for the NQ to head lower. If it's going to be nice to us today, we might see that little retest I was talking to you about. A little retest and another selling opportunity. Hopefully something that doesn't require us to run a huge stop. I'm going to shoot this trend line also. You can see it's going to follow our hard edge fairly closely. So even a retracement back here to the hard edge would not be a bad thing. Just curious if I had taken that on the hash mark. Oh, look at that. Look at how close it came to the profit target. Might have been worth doing a onesie on it and, just grabbing what you could out of the trade. Jim's drawing his trend line a little different. He says, let's shoot one from the underside. All right, let's do that. I need a bigger chart. Play nice, come on. Darn cursor. All right, we're starting to get a little bit of a reaction here. Let me see. Okay, here's our macro pullback. And also another 4-arrow consolidation. Now, these 4-arrow consolidations, we don't want to see, 4-arrow consolidation, 4-arrow consolidation. Anytime you get a pattern repeating itself, that's not always a good sign. Now, we're really working the market here. We're really working the sellers. The sellers really got to step up here and get serious. This is not as strong a trade as the one we were looking at back here, namely that green bar sell. There's still room for the market to make a serious retracement here. That's why I'm covering it higher as well, because this is where the sellers really stepped into the market. Come on, sellers. Come on, get down there. Get down there. Get down there. Oh my gosh, the buyers just will not let it go. Come on, buyers, give it up. Give it up. It's going down today. You're going down, buyers. There. All right. Now, you want to know something? As strange as it may seem, you know how I mentioned to you about doing a 20-day challenge, a 20-day profit challenge? We're halfway there. We need 2 trades like that. 2 measly $50 trades. I know you guys are doing much better than that, which is fantastic. But part of the 20-day challenge that I was talking about, which um, I'll probably start in August next week. And a reminder about that, no trading room on Monday. So pay attention. No trading room on Monday. I don't want everybody emailing Adam saying, how come Eric didn't open the trading room on Monday? There's no trading room on Monday. All right, we're almost at the top of the hour. And Jim's going to tell me here in a second, we're going to be at the 10 a.m. low. So we might see a little bit of a reaction there. Excuse me for a moment while I go get something to drink. My throat is a little bit hoarse. 1 second, folks. Be right back. Okay, I'm back. What did I miss? Not a whole lot. So here we go again. Here taking a look at our eagle. This is looking more like a better retest of this area. These little quickie retests kind of make me nervous. Well done, Mark. Mark says, he says it was a nail biter, but he hit the second sell on the eagle for another 2 contracts. Exceeded his goal for today at $800 in profit. Now he's switching over to sim mode. Well done, Mark. Nothing like working for half an hour and making your day. I love that. Working, I'm using air quotes, working for a half an hour. The whole point that I'm trying to make is that you don't have to chase around a lot of signals, right? You can wait. It's okay to wait. It's even okay to miss a signal. If you miss a good signal, like I did back here on this green bar sell, the important thing is to calm yourself. Don't get yourself all bent out of shape and start chasing signals. It always surprises me when I talk to people how many people blow up their accounts. Well, I shouldn't say necessarily blow up, although I have met a few who have blown up their accounts trying to make good on a bad signal or a missed opportunity. You're gonna miss opportunities. You see me miss opportunities every day. And I've been doing this for a long time. So if I'm still missing opportunities, don't beat yourselves up. You can even use me as an example. You can say, well, if Eric is still missing stuff, then it's okay for me to miss stuff too, which it is. Because the market goes through these ebbs and flows. We all know it, right? The market moves higher, it moves lower, it moves higher, it moves lower, it moves higher, it moves lower. Here in the Pacific Northwest, we're right next door to the ocean, so I can go down to the ocean and I can watch the tides, but there's one thing about the tides. They're not fast, and there is nothing you can do contrary to them. If the tide's coming in, the tide is coming in. If the tide is going out, there is nothing you can do about the tide going out. Well, trading is not unlike that, where you need to be an observer. This isn't like work where you're working at your widget factory, and if you work harder at producing widgets, you make more money. No, that's not it at all. Here you get paid for, trying to figure out who has control of the marketplace. See this little spike that we had here in the Geiger counter? I'm wondering if that's the buyers getting hung out to dry. as we came into the hard edge. There was a trend line here also. Did we actually overshoot? Oh, a little bit. Well, don't tell me the NASDAQ is going to have yet another rally day. Okay, the hawk already bullish. You can see our trade forecaster. Full on scalp mode for the next half an hour. Okay, a couple of questions here about the Raptor. Mark's asking, what's that weird break you have in the Raptor back here? I know, isn't that odd? I've pointed that out to Ben. It happens when I load my Trailblazer onto the Raptor. For whatever reason, the bar when I'm loading produces this funny looking break. I don't know. It doesn't affect the performance, but yeah, there it is. It is strange. Josh is asking about 9 bars back on the Raptor, there was a buy signal. Is that correct? He's talking about this one right here. Now, this is one that, a signal that we've been playing with. I call it a soft edge, in this case, a soft edge buy. However, I would not have been as keen on buying this one. Usually with the soft edge buy or the soft edge sell. Let's see if I can find you an example. I like to see a test of the extreme first and a failure. And what's that going to look like, you say? Well, it's going to look a little bit more like, it's going to look a little bit more like this. Now, this is going to be a soft edge sell. Unfortunately, it did not print a signal right here. We're going to pretend that it printed a signal. But do you see the little itty bitty test of the extreme that we had here? If it had produced one of those and then gave me a sell signal, I would have considered that a soft edge sell, and that would have been an opportunity to short it. Where we're at right now with this buy signal down here that you're looking at, when that signal printed, we didn't really have a test of the extreme, not even a little one. So there was no way to know that the buyers were actually going to head higher. See, that test of the extreme tells us that the sellers are trying to force the market down, then they lose control to the buyers, at least temporarily. So if we have that little test of the extreme, that would have made that a soft edge buy. And this one just happened to have some pretty good follow through to it. The danger with taking the signal like this is that it could trade here to the hard edge and then either resume the trend or turn into a double pullback where it comes down, goes up again, and then comes down for a second time. So that's why I like to see that tested the extreme. Oh, stop it. The test of the extreme, then the buy signal, and then I would consider that to be a soft edge buy. But like I said, this one just happened to have some good follow through. This overshoot here is a little bit of a concern because it's a lot of people think when the trend line overshoots a trading channel like this that it's actually a bearish sign. It's a sign of weakness, but no, it's not. It's actually a sign of strength. And now we've broken the trend line to the upside. So we'll see. Christian is asking, can I use a trade forecaster on the Raptor? Also, absolutely you can, Chris. Where are you, trade forecaster? I got so many things on here. Oh, where'd you go? It's around here somewhere. Oh, there it is, trade forecaster. I don't know why these things don't arrange alphabetically. All right, whatever. So you double click your trade forecaster and it should end up in your assortment down here. So there's your trade forecaster. Then what you need to do is you need to set your opening time. And this would be your opening time according to your charts. The rest of it is pretty much cosmetic. The Raptor always seems to take a little longer to load. And there, voila, it is in the top corner or wherever it is you designate it to be. The reason I only put the trade forecaster on the Eagle is to avoid clutter. You can put everything on every chart if you want, if that is easier for you. You can put the Geiger counter on, you can put the Geiger counter on all four charts. Right? You can have the Geiger counter on your Falcon, your Hawk, and your Eagle. You can have the trade forecaster on all four. You can have the ultimate support and resistance lines on all four. By the way, folks, for those of you who weren't able to attend the trading room yesterday, we did a little demonstration on the ultimate support and resistance suite, and it is on special this week. Let me get you the link for that. If you've been interested in picking up the ultimate support and resistance suite, you can go to this link here and enter this code, all capitals, USNR20, and that will be 20% off. And I can also put the day ranger on everything. But in order to avoid cluttering up my charts, what I've done is I've just assigned one tool per bird because the information will not change. Just because I put the trade forecaster on the Hawk doesn't mean it's going to say, oh, the Hawk is in trend mode. No. The information is exactly the same. Same thing with the Geiger counter. If I put the Geiger counter on all the birds, it will show me exactly the same information. And ditto for the support and resistance lines, the day ranger, all that type of good stuff. Well, speaking of the support and resistance lines, look at the nice little cradling effect we had here. Speaking of that test and retest, the market comes down, hits the secondary support, comes up, breaks through, retests, produces a buy signal, and goes to the next zone, which is primary support. This is a strong one right here. Well, they're all strong, but the blue, the gold, and the other blue, those are the three strongest in your assortment. Once the market gets on the other side of those, it tends to stay in that direction or make a substantial move. For instance, here when we broke the primary support, also on a late filter entry signal, I might add, we could expect the market to move two zones. So if I were like Omar, the Forex guy, I would actually use my second zone as my profit objective, knowing that once I bounce off of the primary support, there's a very good chance it's going to move two zones. So you can see we've got multiple contracts here. I could even split up the trade. I could take part of my contract at, or part of my position at zone 1, the rest at zone 2. And you can see it had some very good follow through there. That would have made for a very nice day too. So like I said, the Ultimate Support and Resistance Suite is available until next Wednesday, 11:45 p.m. Eastern. And then the sale ends. Yeah, Josh is asking, so the S&R levels on the Falcon will be the same levels as the Hawk and the Eagle? Yes, exactly. And like I said, the only reason I don't repeat them is for clarity's sake. But that doesn't mean you can't do that. Go ahead, put them on all your charts. It's fine. You can do that. Okay, definitely getting a little bit more bullish now. So it's really making me wonder about that initial move lower that we had. So Christian's asking, okay, but which signal from the trade forecaster will you follow? All right, so what Christian is asking is, if I understand this question correctly, is if the trade forecaster says you're in scalp mode, does that mean you're only looking at your Hawk scalper? No. This tells you the market environment. It tells you what type of trading activity to anticipate. So knowing that, well here, let's do trend mode first because trend mode is easier. Just because I'm in, let's say we're full on trend mode here, does not mean that the market is going to do, just one of these, a great big move lower. Let's clean this up a bit. Very often it will make a nice progression lower or higher, but the fact that it's in trend mode tells me that it's going to be a smooth progression. So the market was actually in trend mode according to Trade Forecaster during this segment right here. And notice the pullbacks. They were very slight, right? Minimal pullbacks. So what does that tell you about your trading? Well, it says that if the market's in trend mode, excuse me, then I can probably expect a smooth progression, either higher or lower, with minimal pullbacks. Therefore, if I get a signal and we're in trend mode, and let's say I choose to take this signal, rather than risk the trade way back here like I normally do, if I look up and I say, oh, we're in trend mode, maybe, and I know the market's going to be a little less volatile, maybe I'll go with a slightly tighter stop. Maybe I'll choose to extend a profit target. Maybe I'll go 50-50 on my trade, especially if I'm able to take two contracts now. So I'll have one in as a runner. I'm trading two contracts. The market moves lower, hits my profit target, and the other one I would have been stopped out on this reversal somewhere. But the point is that knowing that you're in trend mode allows you to manage your trade more efficiently. Now let's go to scalp mode. I can almost guarantee you that when this was going on, the trade forecaster was like this. So what does scalp mode tell you? Well, scalp mode tells you there's going to be a lot more volatility. There's going to be more violent swings. There's going to be less follow through. So how does that translate into your trading? Well, that tells me that, all right, if I get a signal, say, in my eagle to sell, okay, here I get a signal to buy, I'm going to have to be looser with my stop, right? Because the market's more volatile. I'll probably be more aggressive with my profit target. Let me get in, get out. Maybe I'll even dial down the risk so I'm only taking a single. Let me get in, grab what profit there is, and get out. Oops. Let's see if it actually goes up. There we go. So knowing that we're in scalp mode, once again, that helps me judge how I want to manage the trade. It doesn't necessarily tell me which tool I should be focusing on. The tools are going to produce their signals based on what's going on with their programming, not necessarily what the current market environment is. So we're going to still produce signals in the Falcon and the Hawk and the Eagle and the Raptor, but knowing now that we're in scalp mode, at least for another 10 minutes time, I'm going to be more aggressive with my profit targets. If I were long on this Raptor trade, I would be, and the market's starting to flounder a little bit like this, I would probably just punch out with whatever profit I have. If it's $50 or 75 or 100, whatever it is, just take it. Because it's scalp mode, the market's going to be less predictable, more volatile. So that's how you want to interpret the information that the trade forecaster is giving you. Yeah, Josh says the ultimate support and resistance suite seems like an awesome tool. Hope I can get it. I hope you can get it too, Josh. It is, out of all the tools, it's gotten a lot of positive feedback, and from across the board, not just from DTS users, but just from people trading regular bar charts or tick charts or whatever it is they're trading. It is a universal tool. Oh, fantastic. Mark says, I'm an Ultimate Support and Resistance Suite owner, and yesterday's training was awesome. The Eagle operated just like yesterday's explanation. It moved a couple of zones just like planned, and that's what gave me the confidence to take the 2 Eagle trades. That's wonderful. I'm thrilled to hear that. And we get to hear stuff like that about um, these tools all the time, which is it's just fantastic. There was a lot of programming, a lot of math that went into figuring out the Ultimate Support and Resistance Suite. Let me tell you. Badham is asking, what about the Profit Finder? Do you use it? Yes, and not as much as I should. The Profit Finder, for those of you who don't know, is a fantastic back testing tool. It allows you to optimize your trading, and by optimize I mean you can find what stop loss is working best, what profit objective is working best, whether you should be using this, that, or the other thing as a filter. And it allows you to do it all with a couple of clicks of the mouse. So what you essentially, the way Profit Finder works is you go through your chart, you turn off the buy and sell arrows in your indicator panel, and then you plot your buy and sell panel. So you roll your chart over way to the beginning somewhere, and then you go through it and you play this right edge game, and you say, okay, buy signal, I would have bought here, I would have placed, or actually you just have to put in your buy signals. So let's say you throw in your buy signal here. The market trips it. Okay, so there's one buy signal, and then you just let it go and you find your next buy signal and so on and so forth. And then with the Profit Finder, you can test different stop strategies. You can say, okay, what if I went with the ATR strategy? How would that have worked? What if I went with the parabolics? What would my profits have been at that time? What if I went with the swing high-low? What would my profits have been? Now, the downside to Profit Finder is that you cannot adjust your position size. So you have to know more or less what your average position size would be. So in this case, if your trades normally look like this, your average position size is a single, well then you would put a single into the Profit Finder. Because there's no point in throwing, 5 contracts into the Profit Finder if you're normally trading 1 or 2. It's going to skew your results and you're not going to learn anything about it. But the nice thing is once you do that, and it only takes you, maybe 15, 20 minutes to roll through a chart, plot your buy orders, your sell orders, then you can experiment and you can try these different stop strategies. You can try, what if I rolled to break even after such and such a number of ticks? What if I did this, that, and the other thing? And you get the answers instantly. So you can do what would take you months of back testing or live testing, you can do in the matter of an hour and a half. I call it a trader's video game because that's really what it's like when you start playing with this. It's almost like a video game. And it will tell you your optimal settings. It will tell you what your profit was. It will tell you what your losses were, how many winning trades you had, how many losing trades you had, your winning percentage, and so on and so forth. It is really a powerful tool. So normally what I do with the Profit Finder, and actually thank you for reminding me about it because I should dust it off and run it for the summer. I normally run it every quarter just to optimize it for the season. So right now, the market's summertime, a little bit sideways, a little bit choppy. I should run it through Profit Finder and see what the optimal settings were. Just as a for instance, one time I ran it through the mini Dow and I found out that a 25 tick stop loss, now this was at the time, a 25 tick stop loss off of the high or low kept me in practically all the trades and allowed me to reach a profit objective. And a 25 tick stop loss in a market like the YM is not an unreasonable sum. So you learn a whole lot by back testing with the Profit Finder. It's a very good tool. Charles is asking, how many days do you need loaded on your chart for the Ultimate Support and Resistance Suite? I think the minimum is 10. I do believe I have 25 days loaded in my data. Oh, no, I only have 10. Oh, there you go. 10 days data. And Jim's asking, can I see the YM on the Ultimate Support and Resistance Suite? Absolutely. We'll load that up for you right here. Oh, Mark's trying to be punny. Mark says, time ultimately, air quotes, well spent. Yes. See, you can tell your spouse that, really, honey, I'm making money here. I'm not playing. So here's the Ultimate Support and Resistance Suite on the YM this morning. You can see the market was bracketed pretty well before the open. Broke down out of the open, nice late filter entry signal. So we had this little bounce and retest off of the median line. So here was our test of the extreme, the signal. Down she goes, 1, 2 zones. And now we're back to the primary support. We're fighting that a little bit. We did have the break, the retest, and the signal here. And you can see reached our zone, and now we're starting to flounder. And even here off of this secondary support, notice we got the test of the extreme, the signal, and away you go. So there's the mini Dow this morning. Let's see what the mini Dow is doing on the other tools. I don't think it's quite as active as the YM is right now. Or, sorry, the NQ. They're actually following each other around for a change. So we had a nice first micro-macro cross here in the hawk. Right here, nice first micro-macro cross. Good follow through. A little bit of a macro pullback here, which did make its profit objective. Did give us a test of the extreme. This was an easier first micro-macro cross to take than the one that we saw on the NASDAQ because of the test of the extreme down here. Right? The fact that the sellers failed and that the buyers were getting stronger, all of a sudden they break that high, we come back with a first micro-macro cross, that's money in the bank right there. Okay, let's take a look at the Eagle. This was what we saw as the green bar sell in the NQ. A better progression here actually out of the YM, nice and steady, no real flinching. Market started lower and kept going lower. Although I don't think it, or maybe it did reach as deep as the NQ. Looks very similar. And if we toss a couple of lines across here, it looks like we have an overshoot also, doesn't it? This top one, we don't really have a place to draw it yet, I guess right there. Yeah, Jamie's asking, how much is the profit finder? I don't have the figures right in front of me, but if you go to this link that I sent you earlier, it will have the pricing for the profit finder on there. Jim is asking, okay, Eric, so explain the blue line. If it goes through there, it should go 2 zones. Well, here, I'll pull the YM up again because I know you're asking me about the YM. 1 second. Now, okay, 1 second. Oh, come on now. There. So the blue lines here, you have your primary resistance, you have your median line, you have your secondary resistance. These 3 lines seem to form the strongest support and resistance levels at the beginning of every day. If we go back here to yesterday, see, we always seem to start around the primary resistance, the median, or the primary support. Yesterday, we actually started on a very bullish note because we were already above the primary resistance. Now, so Jim's asking, so if I break this area, I can expect it to go 2 zones? Short answer, yes. So if we broke the primary resistance and we generated, a little signal, perhaps on a retest, yes, I would expect it to retreat to down here somewhere. 1 zone, 2 zones. Very often, if you get support off of this area, it should move 2 zones also. 1 zone, 2 zones up here. Now, in this case, I think we actually moved much higher as the day progressed. Well, almost got to zone 3, just shy of zone 3. So let's take a look now where we are today. So we've broken on the signal here, 1 zone, 2 zones. We've broken up here. That doesn't necessarily mean it's going to run immediately to 1786.87. However, if we come back now with a buy signal, which looks like it might be a late filter entry signal, there's a very good chance that it's going to move at least 1 zone, and more often than not, it will move 2 zones. So at the moment, we don't have a signal. I wouldn't simply trade it because of the breakout, right? We still need to incorporate our signals. Ideally, what happens is it comes down, it retests, and then it will go up. Now, the market did have a much more bearish flavor to it today, so I really thought we were going to see it tail off more, but you know, a signal's a signal. It is working on a late filter entry. But yeah, that's the short answer. If it generates a signal here, your ultimate target would be up here, 176.86, 176.87. My first target would be here, 176.50. That would be near the median line. Josh is asking, can you show me which signals to avoid from the ultimate support and resistance suite? It's a complementary tool, right? It's there to help you make a decision. As I showed you yesterday, there's some people who will even use it just on a time-based chart. Hold on a second here. I'll try to build a time chart for those of you who did not see that yesterday. So we're trading the YM. Let me build a YM chart. Actually, what was that tick number? It was 233, I think. Yeah, 233, Josh says. All right, so there's... Doggone it, can never find it. Where'd you go? There it is. Okay, took me a while, but here we go. So here it is on a tick chart, and just the simplest of ways to interpret it on a tick chart is to let it close below the area and then use that as your signal bar. So if we were looking at this, it broke here, closed below, you could use that now as your signal bar. Now looking back here, it probably would make sense to use those lows as well. But there you go, you're short, and you can use at least the first zone as one of your profit targets. But knowing that the primary lines are very strong, you could use the second zone as a probable target also. Oops, sorry. I'm going to start scrolling my bars here. So you can use your second zone as a target also, which would have brought you down to here. So now that you've reached your profit objective and it looks as though the market is reversing, and why do I say it's reversing? Well, because we're seeing this test of the extreme, right? We're not simply saying, oh, the market's going to trade above the line, I'm going to buy, right? Like over here. Oh, it closed above the high, or pardon me, it closed above the line, I'm going to buy, and then the market brings you in and reverses. No, that's silly. There's no reason to buy there. You're in a downtrend. You don't have a test of the extreme. There's no structure. You don't simply buy it because it breached a line and closed above. You don't simply sell it because it breached a line and closed below. There's always structure to consider. There's context. That's a better word for it. You always need to consider the market context. And it's true whether you're using DTS or whether you've got it on a tick chart or whatever it is you're doing, you're going to get your better results when you take the market context into account. All right, so there's certainly trades to avoid, ones like this, because there was nothing preceding them. But here's another simple one. The market closes above. You could use, the highs here as an entry. Market brings you in, does a little hiccup, and eventually finds its way to the primary support. All right, so those are types of things that you want to consider. Now, here we are trading at the primary support. Okay, it broke the primary support, did not trade higher, failed. All right, broke lower. Okay, whatever. We're still waiting for some sort of structure here. We don't really have anything to trade off of. Broke higher again, failed. So now we're looking at this and we're saying, well, which way is the test of the extreme? Is the test of the extreme this way? And do I expect the market to head lower? Or is the testing of the extreme actually this way? Right? This is a retest of the previous downtrend, trying to recapture the trend. It failed. Do I now expect the market to go higher? So very much a transition period here. We don't really know. We don't really have a feel for which way this market wants to go from here. So until we can nail down who is in control here, there's just not much going on, regardless of whether we use the ultimate support and resistance suite, whether we use DTS or anything. Like, we're getting the same kind of feedback here. So we took the bounce off of the lines, we had the test of the extreme, we went up a couple of zones. Here we are, we're reacting now to the primary support line. We did generate a late filter entry signal. I wouldn't have taken it right on the hash mark. I probably would offer up a couple of ticks and take it there. You can even use these zones if you want to cover your trade, right? There's going to be some sort of support down here. So you can even use that zone to cover your trade. Now look at what we're getting. We're getting an early trend change signal, right? So it's confirming what we're seeing in the price action. Here's an early trend change signal. Why is it early? Well, we get our down, up, down. We're printing the signal just as the trend line is changing color. The filter, everything is in sync, but it's not like a proper trend change signal where we have the market actually move through, change the trend line, come back, then come down, produce a signal, right? So this is a more aggressive type trade, but look, we're bouncing off of the primary support, aren't we? So if it bounces and heads lower, the primary support might lend some strength to that. Will it move two zones again? Well, I don't know. I'm pretty confident it will move at least the one zone. So when it gets down here to this first zone, I might choose to become more aggressive with my stop, or perhaps even take profit there. Yeah, just going over some of your questions here. So Josh was saying on the YM, long the YM 176.25, 176.25. Yeah, so this is where we're looking right here, right? So we had that buy signal. Again, I wouldn't have taken it right on the hash mark because of this swing right here. If I can enter above the swing high for the sake of a couple, 2 or 3 ticks, I'll probably enter above the swing high, just to avoid this type of scenario in a market that is not really sure which way it wants to go. And why do I say it's not sure which way it wants to go? Well, what is the trend today? Well, What is the trend today? Down, right? Big time down. So just because I flash a buy signal right here, am I to believe that the buyers have totally, or the sellers have totally walked away from this market? No, not likely. So that's why it's okay to buy these early signals, because you're looking at a retracement type mode. Maybe it's driven by profit taking. Maybe, who knows? Maybe the buyers are trying to make a push, a serious push higher. But hey, it's a bear day today. No question. Right from the overnight, the sellers have controlled this market. So what we're looking at here may not turn out to be anything more than just a major bear flag before the next move lower. So with all this waffling going on, I don't want to be necessarily all that aggressive on my entry. Okay, so now my sell signal, my band has turned green again, so my sell signal is no longer valid. In fact, this is one of these situations where very often you can use an OCO order and bracket the trade either higher or lower, and just let it get outside of this range, and you should have a pretty good idea who is going to be in control, whether it's the buyers or the sellers. It's not going to move super fast, so you can set yourself a stop. Oh, way to go, Lance, knocking it out of the park. Wow. Lance says he picked up $1,230 on the Raptor today, $2,400 for the week. Way to go, Lance. Out of the park. Okay, I feel like I've missed somebody's question. Joe is asking, can you take a look at crude when you get a chance? Absolutely. All right, so we'll just let that ruminate for a little bit. Here's crude. We'll start with the Falcon. It looks like it's working on a trend change signal lower, but even so, crude very sideways today, right? It's obvious the market's in a big trading range. It's not to say you can't take advantage of the market within this range, just that it's going to be kind of tough slogging. If we take a look here at the Eagle, where I also have the trade forecaster, you can see we're full on scalp mode for another 20 minutes. Yeah, all right, that looks about right. After which, we're going to be moving into trend mode. So again, that's not to say crude oil is going to go boom, like a rocket, higher or lower. Rather that it's going to have a smooth progression. There's no question this was trend mode here. But I'm saying it's trend mode not because of the big run up, but rather because of the minimal pullbacks. And why did you cancel my other side of my OCO order? That's happened to me a couple of times now. I'm not exactly sure what the cause of it is, but I need to get that fixed. All right, so it looks as though we're getting that bounce now off of the primary support. And it looks, at least like for the short term, the sellers have a little bit of control here. Again, the early trend change signal, because we're taking it just as the trend line is turning over, but it is preceded by that test of the extreme. That's why it's an early one. I simply don't buy because the trend line changed color and there was no test of the extreme. Why? Because the market may not be ready to move higher. Jamie's asking about the ultimate support and resistance suite. Oh, and I haven't brought over crude oil yet, Joe. I'll do that. Oh, I did bring over crude oil. Sorry, I'm confusing myself. Yeah, nothing really tradable in crude at the moment that I can see. Jamie is asking regarding the ultimate support and resistance suite, are they based on market profile, points of control, or what is the underlying premise of them? Fibs, pivot points? None of the above. No word of a lie, folks. It took probably 6 months of math to come up with these support and resistance lines. If they happen to coincide with a point of control or a fib level or a pivot point or something like that, that is purely coincidental. No, these are based on price action. They are based on what happened yesterday and the day before that and the day before that and the day before that and the day before that. What they do is they take all that information about the price activity and they run it through a very complex formula, and then they'll print the lines for the next day where the market is anticipated to find support and resistance. And I know it might sound a little bit funny coming from the guy who developed them, but they still surprise me how well they work. Because you're trying to predict the future, right? The future is unknown. So trying to predict the future and actually watching the market turn off of a median line or turn off of a secondary support line, it's still a thrill. Or to pivot here off of the primary support and head lower and possibly get to our at least our break-even trigger, if not our profit target. Yeah, it's a thrill. I could tell you, Jamie, but I would have to kill you. The only other two people in the world who know the programming are Adam and the programmer himself. And Adam's got a memory like a sieve, so I don't need to worry about him. And the programmer is sworn to secrecy. No, they're very unique. That's the other reason I really like them. Come on, get down there. Get down there. You know you want to go. Get down here. I'd love to see a trade back down here to 50, 55, even 60. You can see they're putting up a little bit of a fight. I would normally punch out. Like if I'm doing my 20-day challenge, I would take the $70. Okay, we can go to the ATR now. And we'll let her go because we're at break even. says he's got a memory like a sieve too. That's what sticky notes are for. Yeah, I shouldn't tease him too much about his memory because a lot of times mine isn't much better. Things getting a little quieter. Oh, well, that's why. It's a little bit after 11 Eastern. A lot of traders are going to start getting a little hungry, thinking about what they're going to order for lunch. You can always tell the guys that aren't doing so well because they're brown bagging it. Oh, they're going to stick on that support line after all. Come on, get down there. Give me another red bar. Give me another red bar and we're pretty much home free. Jim saying the primary could be a stop area also. Yes, absolutely. So I know some traders will use these lines when they formulate their trades. Well, here we're just going to punch out of this. When they formulate their trades, you know, if they're taking a trade like this and they enter, they will use just the other side of the support or resistance line as for their stop. And you can see that that would have worked out fairly well also. And vice versa. You know, if you're taking a buy down here, you can run your stop below the secondary, and as the market breaks and makes its way through, a lot of times people will use these levels to roll their stops underneath also. But don't snug them up too tight because you see every once in a while there'll be a little bit of a break like that, right? So you don't want to be sitting right on the line. You want to give yourself a tick or two or three, just so you don't get stopped out on a slight little fudge of the line. Because they are predictive, of course, right? Okay, you guys, I think we're going to button up the room for the day. If you are trading today, I think you can expect the YM and the NQ to head lower. I think we're going to see a nice run to the downside here. So look for selling opportunities. If you're trading crude oil, I think crude's going to keep going sideways. It's pretty content where it is, sitting around this $48 to $50 a barrel range. I don't see any impetus at the moment for crude to do too much. Soybeans, we didn't look a whole lot at soybeans today. They made a nice little move lower here. Soybeans on the Eagle. Looks like they're taking a little bit of a bounce off of the trend line. But here too, the market is very sideways, very range bound. So it looks like if I skewered this, probably somewhere around 950, bean traders are pretty happy with that price. Okay. All right, you guys. We'll catch up with you Friday. And remember, no trading room next Monday. So we'll see you guys tomorrow morning, bright and early. Bye for now. Well, early anyway.